All right, it's Women's Wednesday, and this week's edition of Women's Wednesday, let's take a closer look at the power of financial independence. My colleague Kavita Thaplayal is in conversation with Gauri Devidayal, who's the co-founder and CEO of Food Matters Group, who shares the to-do list for investment for women. What factors should you keep in mind when it comes to investing? Let's go across and take a look at this conversation.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
Hello and welcome. You're watching this very special edition of Women's Wednesday with me today. I'm Kavita Thaplayal, and the guest I have on the show is Gauri Devidayal, co-founder, CEO of Foodworks. Gauri, hi. Thank you so much for taking out time. And this segment is all about women financial empowerment and your journey when it comes to financial freedom and financial independence. So Gauri, tell me something. How do you really understand women financial empowerment?
I think, this is something that's integral. We can't shy away about talking about money in our homes. That's where it starts. My parents brought me up to be very independent. And that's, obviously it's something that happens with education, but it's also about financial independence. I was always sort of groomed to have a job and to be financially independent, whether I got married or not. And I think that, it's important for this conversation to start at home, that there isn't a taboo around talking about money with daughters, with wives, etc. in the home. And then, of course, as you sort of become independent and you get a job, it's incredibly empowering, to be able to buy your own things, to make decisions. This is where it starts. So financial independence is incredibly important, according to me.
All right. Gauri, before beginning your journey as a woman entrepreneur, you were also a tax specialist. You've worked under different capacities with different organizations. I really want to understand how is your investment portfolio placed right now? Do you have a personal investment portfolio, or all your money is just getting invested into your business?
No, I think, I've had, my parents started a portfolio for me when I was very young, and I'm now doing the same for my daughter. But, when I was old enough, it was handed over to me. It's sort of split between equity and a little bit of debt. But because I was young when I took it over, I took a more risky approach and have invested more in equity. But over the years, I've also invested in real estate. I think that's a very secure investment. And when opportunities arose, I sort of took advantage of them. And now I'm trying to do the same for my daughter.
What kind of an investor are you? Can we call you a risk-taking investor, or you are someone who's more conservative in your approach? You really sound like someone who's very well diversified as far as the financial portfolio is concerned. But how is your approach? Since you also invest in equity, I believe you have a clear understanding, of how to invest in stocks or be it mutual funds. So what kind of an investor you are?
I would say that, I've generally been a sort of risk taker. But having said that, I think you also have to be mindful of securing returns on your investment. So,
Sure.
The reason for doing a bit of real estate was that at least you get some income on a regular basis if you're able to rent it out, which is what we've done. And I think that is important to allow you to maybe, if you are living off your investments. And, you would asked earlier about whether I've made investments in equity or put it all into my business. I think that's something, really important for women to understand, that you can't put all your savings into your business, especially if you are starting out something new. So, always put some money aside for that rainy day. And even when you do invest in sort of equity, I think it's important to understand what you're putting away for a long term and what you're putting away to have, easier access, quicker access to, where you're not going to lose out because you liquidate those investments. So I think risk is one part of it, but also understanding the different things that you're investing for. For example, if it's your child's education, marriage, college expenses, whatever, they all have different periods over which you're going to be needing the funds. And so I think you have to invest accordingly. And risk is one part, but liquidity is another part. So obviously real estate is less liquid, and putting a certain proportion into real estate is something that you can do if you're not going to necessarily need access to those funds at short notice.
Gauri, how do you look at equity as an asset class, and how are you invested? Is it via mutual funds or direct stocks, or you have a mix of both?
I have a mix of both, and I think the whole advantage of mutual funds is that ideally you have somebody who's looking at it on a day-to-day basis and managing it for you. But having said that, you can also invest directly in equity, and there's a lot to gain from doing that as well. So I think having a healthy mix, but understanding the reason behind the different asset classes is very important.
Sure. Do you have an investment strategy for your daughter already in place? Where are you investing, and what's the approach like?
Again, she's young, so obviously it's a bit more of a risky approach, and it's largely in equity. I think one thing I will say that from my previous avatar before I became a restaurateur, where I was in as a tax consultant, I think one thing we get is that yes, we look at the nature of the asset class, but then we also need to remember the tax implications of what of each type of investment bucket, and so I think that a lot of people don't remember when it comes to making those choices.
Exactly. You being an entrepreneur and also someone who is so disciplined as far as their investment approach is concerned, what would be your guideline to all the women viewers or investors who are watching you right now, if they want to become an entrepreneur or maybe begin their investment journey? What would you like to advise them?
I think if you want to become an entrepreneur, what I would say, like I mentioned earlier, is that don't put all your savings into your business. Keep aside something that you're willing to risk, because starting out your own business is definitely a huge risk. And it's also exceptionally rewarding if it does well, but be sort of prepared for that risk. And so therefore, don't put all your eggs into one basket. And I think another thing I would like to say is that understand you may not be the accountant or the CFO of your business, but understand those numbers, understand accounts, because that's how you will sort of, be able to save money and put it into investments. And there are a lot of smart ways to run your business and invest the money in, especially if you're a cash flow heavy business, to invest those monies, even if it's for 1 day, 2 days, 3 days before it gets deployed towards expenses. So I think being aware of these things when you're starting out a business and using your investment acumen to make the most of your, of your cash flows is really important. It's one tip I'd like to share.
Very important tip. And with that, it's time up on this very special segment. Thank you so much, Gauri, for taking time out today. Thank you
for having me.
And it's a wrap on this special segment. Thank you so much for watching. Goodbye.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.